So somebody asked me to simply explain a bull trap in a forex. What's a bull trap? It's not just in forex. You can find bull traps in everything that people trade on the planet. For example, in crypto, in options, it happens all the time, everywhere. So in this video, I'm just quickly going to show you an example or examples of a bull trap. So if you notice here, what was happening here, we were in an uptrend and price was going up in a nice way. And see what happened when we reached this area. Price basically broke through, and many people who are impatient actually would have entered their buys there. Let's just turn this into a line, just to signify our buys. And many people who were impatient would probably have bought, because bull traps usually target breakout traders. What are called breakout traders? Basically, people who are targeting for price to simply break out of a zone. So we have a zone that you can clearly see there. So people who are impatient probably saw this as continuation of this move, and they probably would have bought, hoping that we were going to go continue going up. But lo and behold, what happened? Price reversed on them. So everybody who bought in this area, hoping that a price will continue going up, were caught by what we call a bear trap. So let me just highlight it so that you can clearly see. So this let me see if I can change color so that it's not the same as what we already have there. Let's use gray or black. So what happened here is what we call a bull trap. Because we were in a bullish momentum, things were going up, and eventually we reached this zone, and people were watching this zone to look for a breakout of price to the next zone, and it seemed like it was going to happen. It seemed like it was going to happen. That's why people bought, and lo and behold, it reversed on them. So that's what we call a bull trap. So all the people that bought in this area basically lost their trades if they held them for too long, hoping that prices would continue pushing up. They were stopped out, because then they would have their stop losses maybe in this area, and prices came down and stopped them out. So that's one example of a bull trap. Let me see if I can get you another one just to so they happen all the time. What they do is to target people who are trading breakouts. For example, again here we are at a zone there, and people who are watching this zone for a breakout, they thought, wow, let's buy, and it did not happen. It reversed on them. So you really need to be careful of these bullish traps. So they are kind of different from what we call fake outs, but they are kind of the same thing. This will be an example of a fake out. What's usually the difference between a bullish trap and a fake out? A bullish trap will usually come up here and dance around it for a moment before reversing, whereas a fake out would just be one candle going up, the next candle goes down and immediately traps everybody who probably bought, and it continues to go down. So a fake out is like quick and fast, whereas a bull trap is more, it's it would seem like price is really broken through, and it's probably going to be a time to continue buying out of that breakout. So this is a bullish trap. I mean, it happens all the time. That's a bullish trap. So you really need to be aware of this if you are going to be trading breakouts. If you're going to be trading breakouts, you need to be aware of this. That's why I always say when I do these videos, if you've ever listened to me carefully, I always say that we are going to wait for a decision, because we don't want to be caught in these bullish or bearish traps. The bearish traps are obviously the opposite of the bullish traps. So when you hear me saying we are going to wait for a decision, we don't rush in. It means we are waiting for these things to actually play themselves out before we can actually see if really the guys that control the market are really interested in going this way or in going that way. So people use various things to stay away from these traps. For example, when price breaks through, let's just do that. Let's say that's our price and it breaks through. The first thing that you can do to yourself is don't buy. People rush in and buy because of what? Fear of missing out. The moment price breaks through, they buy. The clever person waits for price to actually return to this area and not break through, and actually wait for a clear sign of momentum that this is now happening, because this, you can see the trap can actually happen for several candles. So you really need a good candle, an engulfing candle, a pin bar, something ideally to show you that they have made a decision to continue going up. There are many things that people can use. Some people use Fibonacci, some people use trend lines, some people use channels, some people use flags to give them an idea of whether it's a trap or whether prices are really going to continue going up. So if you are a person who is watching a price in range, so it usually happens when prices are in a range, that's where you get these bullish traps as well as the bearish traps. So usually when prices are about to break out of a zone, be mindful of this. Be mindful of this. Be patient enough to let price show you whether it's indeed going to go this way or it's a trap. It's a trap for you to what? To place your buys, and lo and behold, they reverse, prices goes the other way. So that simply explains a bullish trap. It's usually targeting breakout traders. Breakout traders. That's why breakout trading is usually dangerous. I prefer the patience. I prefer patience to just see if you can actually get a clear direction. We want to get a clear direction before we enter the markets. Don't assume things that price, because it poked out of this area that it's automatically going to go this way. I think in previous videos I have encouraged people to what? To always have two biases and to always be patient. The market, let the market do what the market wants to do, and you just react from whatever the market shows you it's doing. Don't rush. Don't rush. Otherwise, you get caught in these traps. We said this is a bullish trap. It happens on a bullish run. It happens on a bullish run. There is also a bearish trap. Obviously, this will be a bearish trap. It happens on a what? On a bearish run. On a bearish run, you get a bearish trap. So if you are trading breakouts, just be careful of this. Let price do whatever it wants to do and let them show you exactly where they want to go next. Don't rush in. Don't rush in unless you have money to waste. Okay. I hope this quick video is explained the bullish trap in simple terms, in a simple way that anybody can understand a bullish trap. If you are not subscribed yet, please go ahead and subscribe so that you do not miss future videos. Like this video. If I did not entertain you, at least I've given you one or two things to think about. Those that are looking for free forex robots, indicators, books, and stuff like that, see the links in the description box below. Visit those links and see if you cannot find what you are looking for. Many people also ask me about the broker that I use. Their link is in the description box below. If you have questions, comments, or thoughts, leave them in the comment section below. Until next time, bye.